G'day expats and welcome to another episode of Expat Chat, episode number 66 today. And we're joined by my colleague and mate, James, who's now back in Australia, enjoying the sunny climes, in inverted commas, of Great Australian weather as they come into a La Nina summer. So how's it been, mate?
No, it's been good, mate. It's terrific to be back. And ladies and gentlemen, thank you for joining us today. As always, joined with my co-host Brett Evans, the managing director for the EMEA region. Mate, it's good to be back home. It's you're right, La Nina. It's wet. Frankly, putting it, it's wet.
Yeah.
I think there's a big deluge right now down towards Sydney and New South Wales. They're really copping it again, and there's I think a bit of flooding going on. So it's good to be home. I couldn't get used to the heat while I was over in the sandpit, but as I realised, everything's just done inside, aircon everywhere. It's pretty comfortable actually.
And you came at the milder part of summer too. So we'll
Yeah,
have to get you over here in July and put some hair on your
really test
chest.
me. Oh yeah, get me out on the golf course, see how I go.
Done that before, and shout out to the guys at AIS Sharjah, the teachers up
Yeah.
there. I've played with them a couple of times up in Ajman, and when you see 53 degrees on your phone and you're playing golf in the middle of the day, you know you're alive.
You're drinking liters of water, no doubt, drinking bottles.
Yeah, and
Oh
never
God,
going
I
to the toilet.
couldn't
That
imagine.
was that was the funny
Yeah,
thing. Yeah, we're going through two bottles a hole and never going to the toilet once after 18 holes.
that's right. That's right. And mate, listen, we had a great couple of seminars on while we're there, and then
Yeah,
to our listeners, we've actually we're just putting up right now and on the socials as well. Be going out. We're doing an end of October seminar.
yep. 27th of
So doing
October and 28th, depending on where you are in the world.
that's
So
it. Yep, bit of a shout out there. Couple of webinars, doing a bit of a wrap up for the webinars on. I suppose we're hitting a few things, aren't we?
no, we are. We're, link will be below, so you can click on the link and pick your times and dates that suit you. Essentially, what we're doing is putting in the virtual world what yourself, Jeremy, and myself did in Abu Dhabi and Dubai this month.
Hmm.
And thanks once again to all those folks who attended. Lots of regular faces, lots of new faces. So good to meet everyone. And to us, it's a matter of educating people. We're in a very strange environment right now with regard to the property, currency, equity markets, what's going on there.
Mm.
Combine that, overlay that with tax residency and all these things. So
Yeah.
the seminar, webinar, I should say, later this month, we'll be covering off on Labor's delivering their first mini budget since being
They
elected
are.
in May.
Yep.
So it's going to be interesting to read the temperature of what their focus will be going forward in terms of policies, taxes, and so on and so forth. Obviously,
Yeah.
looking closely to see whether they're going to providing updates on the tax residency or whether they're going to wait for May next year. Thank you
Yep.
very much to everyone who signed the petition,
Yes. It's terrific.
5,235 or something like that. So we've got the
That's right.
5,000 mark, which is fantastic.
Hmm.
And from our point of view, that's now been passed on to the petitions committee, who will then present it to a minister in the House of Reps, and we shall wait with bated breath.
Absolutely. We'll wait and see. And I mean, if we look at what's coming up for the rest of the year, I mean, it's a busy end of the year compared to probably previous years, to be honest. As you put it, we've got the half-yearly fiscal budget update from the government. Be interesting to see what's in there, what they're thinking. We know back in Australia, the fuel excise has finished off, and I think they've handed out a few fuel tax credits now through sort of the small businesses and other things. We've got a CPI readout towards the end of October as well for Australia. So be see what's going on the inflation side back in Australia, and if I suppose the interest rate increases recently have done much. And then we'll also be glued to seeing what the US FOMC meeting is going to say, whether the Federal Reserve is going to keep going hard and fast on interest rates.
Yeah. And that'll be
So
dictated
yeah,
by today's inflation numbers coming out of the States. So
that's right, tonight.
that's going to be a real determinant or a pivotal time when it comes to, do we zig, do we zag? Are you getting to the end of the rate rise cycle, or as things are
Yeah.
going up? But mate, before we get into what's on the cards for
Yes.
for the next bit, let's get the jingle out of the way. All the
Hmm.
information that we're going to talk about, and verbal diarrhea, I guess is the other way
Hmm.
people might phrase it, should be construed as informational, educational purposes only. Please do not take this as financial advice. If you do need to get personal advice, speak to Atlas.
Absolutely. Absolutely. And I mean, it's tonight, our time in Australia is when the inflation figures come out, and I wonder. I mean, that they're good with their inflation figures in the US. You know, they get their monthly readouts compared to Australia, which previously we went quarterly, but they've changed that now, haven't they?
They
In
have.
Australia,
We get monthly now.
oh,
Yeah, we did a little happy
yeah,
dance, didn't we?
it's good to be in the 21st century.
No,
So,
welcome,
yeah,
welcome to 2022 ABS.
yeah, exactly. Gosh, get with it. But it'll be good to see what those figures look like. I mean, you know, when we look at contributors, I think oil's probably come off a little bit as well. Price of oil. So fuel prices have tended down a little bit, but not too much in the last month, let's be honest, compared to all the way back in June. But it would be really nice to see that starting to trend down a little bit because you know, it gives us that little insight into what the Fed might be thinking. We know that they're still committed to 2% inflation. And I suppose one thing I heard in the last couple of days, which I thought was really interesting, is when they raise interest rates, obviously it empowers the US dollar. And that's why the currency, the US dollar, is so strong right now compared to most other currencies. It's definitely weaker against the, definitely caused the AUD to be quite weak. And it's interesting because it's almost like they are exporting their inflation.
Yep.
And when you really think about that sort of concept, they're raising interest rates, so they're appreciating the value of the US dollar, the major trade currency. But what they're doing is they're kind of screwing the rest of the world because they're just exporting their inflation, trying to buy things in US dollars becomes way too expensive. But on their side, it's great for them because, you know, everything's so cheap now when they're importing it. That's right. That's right.
Yeah.
It's reducing the purchasing power of the triple P around the world. And it's just such an interesting concept that by them going hard, fast and quick, especially probably one of the first major banks lifting, they're exporting their inflation to the rest of us and we're copying it. And the only things we can really do to try and keep up, unfortunately, is also raise interest rates to empower our own currency. It's just such a unique concept.
It's a financial arms race, isn't it? Really, in terms of trying to create competitiveness. And it's one of the reasons why the Swiss pegged their Swiss franc onto the euro many years ago, was because that's exactly what was happening. Switzerland was becoming too expensive for those in the Eurozone, and Switzerland decided to, you know, repeg their Swiss franc to the euro because it was becoming uncompetitive, and people in the rest of Europe were going elsewhere as opposed to going to Switzerland because, you know, the Swiss franc was so strong. So, you know, then they depegged it, you know, was it last year? I think it was. And it went up, I think 40% in 18 seconds and closed up for the day up 18%. So a lot of Swiss people became millionaires overnight just on that, on that conversion, which is good for them.
That's right. And I mean, one thing, I mean, we're talking about currencies. I've been keeping a close eye on a few different currencies, but gosh, the euro compared to the Australian dollar, it's had a good lift, especially in the last month. And I think when we look at sort of where the euro was after sort of the main event back in February, and then obviously throughout March and then through, I suppose, June and a little bit of August, it's starting to lift again. But I just wonder this sort of, I guess, risk-on approach with the euro versus the AUD with it lifting. I just wonder how long that run can last. But when you look at the Eurozone, they're really going to be going through a difficult situation right now because of winter gas prices.
Yeah, so their purchasing power, obviously they're settling, you know, energy, the energy currency is virtually US dollars. So they're going to be buying, you know, black gold and LNG in US dollars using euros. So, and those prices have gone up anyway. And then we saw OPEC, or OPEC Plus, I should say, just recently agreed to not increase production. So that's going to push the price of, petrol up. At the end of the day, you know, Saudi's got to pay for the NEOM and all those giga projects. So they're looking after themselves.
Well, it was interesting when they were making a comparison of sort of LNG and gas prices. So right now, with oil dropping below 100 per barrel, I believe, right now they said if you want to sort of look at sort of how that equates on the gas prices, it's like paying $600 per barrel. And when you put it in those terms, you're like, holy crap, that's just ridiculous. So I think the Eurozone is going to go through obviously a bit of a pain point through winter, but as they come out of it into spring, obviously that'll be better when the warmer periods come on and there's less, I suppose, need and reliance on obviously heating and those sort of things. but there's just still plenty of uncertainty around there. But I would say right now, when we even talk about international share markets, Australian share markets, the one consistent theme is negative sentiment, but it's priced in. There's
It
not
is.
much new. There's not much. Oh, I'd say there's nothing new that can come out, even for the remainder of the year, probably the next
Never
six
say never.
months.
Never say never. We could
Never.
have China have a crack at Taiwan. You never know. But
Oh
to
no,
me,
there. Yeah.
it's this is all sentiment driven, not fact driven.
Yes, that's
You
it.
know,
That's right.
what drives share price at the end of the day are P&Ls, earnings per share, hard numbers,
That's
and
it.
companies are doing really well. So it's nothing to do with the fundamentals of how these companies are going. Even forward guidance, they're still looking at EPS growth, depending on the country, between 5 and 10% over the next 12 months.
Yep.
That's
That's
fine.
right.
PEs have come back to reflect that. That's fine.
They
What
have.
this is
Yep.
right now, and the market really wants to rally. We saw that when the Reserve Bank of
That was
Australia
last
didn't
week,
yeah, they didn't
2 weeks ago. Yeah.
raise rates by 50 bips. They did it by 25. So we saw
Oh,
bang, everything kicked up. So
oh yeah.
based on what happens today with inflation numbers, we could see a stronger US or a weaker US, depending on how that looks. If the numbers show that inflation is not under control, then obviously your best mate, JP, Jerome Powell, is going to have to keep kicking up rates pretty hard. And from that, then we'll see the US dollar strengthen even further. I even said the word to a client yesterday. I said, if today's number is not good, you may see the Australian dollar with a 5 in front of it, which I
Yeah.
didn't think I'd say that for a while. But yeah, it's a big possibility.
No, I agree. I don't think we thought we'd see that again. I mean, we saw it peak COVID when everyone flooded
March
to
2020.
the major trade. That's it. Yep. Just out of fear. And now with inflation being exported to the rest of the world from the US, it's there's definitely potential. But I mean, I'll say this: with the RBA when it went from 0.5 to 0.25, and I think the RBA will just do 0.25 increases maybe for the remainder of the year. And I think that's very sensible because you've had this front loading, and this is my concern about the US. You've had front loading, and it always takes a while. There's always a lag effect. So I just really wonder how much Jerome Powell is pricing that lag effect in. What he's doing now, that's not going to be felt until 4 or 5 months later. So doesn't want to stall the US economy, but definitely some overheating there. But I think when we look at share markets, how quickly they change. I mean, we saw the Australian share market lift more than 4% in 2 days.
Biggest day in 4 years or something, I think it was, yeah.
Yeah, well, I mean, if we look at the US market, if Jerome Powell chooses to, everyone's thinking 0.75, but he does 0.5, there's going to be a very quick lift, and it's the same when they get to the point where we have 1 month where they're like, we don't need to lift, we're comfortable, and that's gonna freak out share markets, and you're gonna see big lifts, and it just goes to show that. When you look over a long-term horizon, if you're missing, one of the best days in the share market over 10 years, it can really stack up. But
you can miss 80% of the gain sometimes over a 2-year period. If you miss those key pivotal days over a 2-year period, you can sometimes lose up to 80% of
absolutely
the return on that period. Just actually another point I was going to mention before, which is an important one. I think now that property is well on the nose amongst most markets. We saw the RBA deliver their report on the state of the debt market in Australia. And there was some really interesting things come out of that. We know that people would find rising interest rates and rising inflation difficult to manage. But what blew me away was how serious those numbers were. So I think they said 13% of people are in severe mortgage stress already. And another 30% are in mortgage stress. So mortgage stress says that after you paid your bills, you've got less than 5% of your earnings capacity left over. That's 30% of the mortgage market right now. And then you've got what people in severe mortgage who can't pay their mortgage. So that's 14%.
Well, actually, it's a good point you make, because there's a whole cohort of property investors, first home buyers, that are still on these 2-year fixed loans or 3-year fixed loans at anywhere between 2 to 2.5%. When they kick out in the next 12 months, going from 2.5% to maybe 5.5%, and these are individuals that the assessment rate was obviously a lot cheaper back then, 1 or 2 years. Whether they're joint household on a much lower income, they're not going to be able to afford a mortgage, which is jumped up by 2.5% on top of what they're already paying. So we are going to see I think, a lot more pain in the property market over the next 12 months, but there's always a lag effect.
Everyone's saying it always escalates towards the end. So right
Yep.
now it's that small little snowball that's just
Building.
building. You know, and like I've said to all my clients anyway, and like we said to people in the seminars, we haven't seen the true rollout of that market right now. So everyone right now, if you're on the outside, you're not looking at the property market. Now you're looking at the share market, especially from an expat's point of view. You don't mind the property market because it is taxable, but if there's a gain to be made, you don't mind paying tax as long as you make a gain. Right now, it's smelling badly and it's taxable. And you look at the share market, which is already adjusted because it's just like that.
Well, yeah, that's what I was going to say. That's right. I was going to say this, that when the share market switches into gear and starts turning into an aggressive bull, which it will,
yep,
you'll then look at the property market. Property market will be still falling, and it probably won't even be in the worst point yet. It'll probably still have another 6 or 12 months before it hits the bottom and teeters off.
Yep.
And there won't be a good correlation there because of the lag effect that builds into the interest rates and then the mortgage repayments. And I mean, cost of living will slowly drive down, but it won't be quick enough to stave off, obviously, people needing to sell their property. Absolutely.
Well, it's like what Jeremy was saying, and just for the folks out there who don't know who Jeremy is, a plug for the Expat Mortgage podcast. You need to get on that. Not as good as this one. It's with Jeremy and James. So
that's true.
I've got to be biased. That's
fine. I'll allow it.
So Jeremy runs Atlas Mortgage, our mortgage division. He does all of our loans for our expat clients. And like he was saying, the property market requires capital to feed it. And when there's that constriction of capital, which is what's going on right now, it's sort of like taking the oxygen out of a fire. It just totally snuffs it. So, people are saying, when is the property market going to turn? And it's going to be when we see an easing of that capital, restriction. And I guess the foot gets taken off the throat of the property market. But we're not seeing that for the next 2 years at least anyway.
No. I mean, I think in some areas they're predicting, especially the major banks. I find it interesting what those big CEOs are saying of the big four banks. They're predicting, 15 to 20% drop in, the major CBDs. Some areas will probably remain a little bit insulated, but they'll still slow right down. That's pretty normal. But the major CBDs, they will feel the most pain. Absolutely. And even the Crane Index in whether it's Brisbane, Gold Coast, Sydney, it's slowed right down. Construction costs are still ridiculously high. So I feel like we're going to go through a slow period now for maybe the next 3 years when you just look at infrastructure growth because everything's so expensive. Maybe the big major projects that will be happening will be mainly obviously state funded or government funded, but outside of that, nothing major from a private point of view.
And you can see that in the numbers. If you look at the housing building approvals numbers, they've just really come off. So that's always that correlation between the two. And I know a lot of clients who are looking to build and now have put it on hold because they're just waiting for the building cost to slow down because the prices right now is you're building a $700,000 house and the builders as in multiple quotes are quoting 2 just to try and cover themselves. So like, you know what? We'll wait a year or 2, let those prices come back down, and we'll build our $700,000 house for $700,000.
Yeah, well, that's it. Those that try and flip houses or do the duplexes and those sort of things, there's not much fat to chew anymore when you try and build a house and then flip it and sell it, for 1.5, 1.6 on each side. That's not there anymore because the build itself is going to cost you 1.2, 1.3. So you're leaving yourself a very fine sort of profit margin, but then you've got your holding costs which factor into it as well. So you're not seeing too many houses and places being flipped anymore. I think everyone's sort of hit the pause button, and I think they'll be waiting at least 3, 4, maybe 4 or 5 years to even consider doing it. That's just the reality of the situation right now.
Yeah, you need that activity, that frothiness in the market to do what they want to do, and you need people competing against each other. Right now, everyone's sort of like, the great Aussie saying, yeah, but nah. Yeah, and that's what I think that typifies the Australian property market right now. You're not seeing properties going to auction; they're going to private trading now because they're not getting that competition at an auction.
That's
so
right.
Everyone's changing their tact.
Yep, absolutely. You're right. I mean, compared to sort of when the property market switched on due to money being so cheap, you were up against maybe 10 plus buyers. Now you're up against maybe two, maybe one,
Exactly.
because the money's gone. It's been, I suppose, like you said, the oxygen's been sucked out of the room.
Yeah.
Just not there.
No, exactly, mate. So, look, I think it's a good place to leave it on. Just a bit of housekeeping for those folks who are on Facebook. Make sure you join our Australian Expat Financial Forum Facebook group. There's over 1,000 Aussies in there. Link will be below. Make sure you register for the upcoming webinar. That'll be on the 27th and 28th. Thank you to everyone once again for completing the petition. And don't forget to go and check out the boys on the Expat Mortgage podcast, which I'll put a link below as well too. So a lot of good stuff there on mortgages and property and those sort of things. So have a good, but mate, I'll bid you a good day, and we'll catch you on the next episode.
Sounds good, mate. Enjoy that sandpit. Speak soon. Cheers.
Thanks, mate. Take care.